Yeah.
Yep.
Good morning, everybody. This is Lisette De Leon with the Leon Group. Uh,
Ahmed Mohammed with America's Choice Home Loans.
Good morning and happy December. The year's almost over.
Yeah, it's almost over. I hope everybody had a great Thanksgiving. It's kind of hard to get back into gear once you have so many days off, and then you try to get back to business, and also we've got Christmas right around the corner. So,
We had Christmas since before Halloween. What are you talking about?
yeah, this year everybody's in a rush.
Weren't you at Sam's? So, before anything, I wanted to let you guys know that GQ Radio is going to be hosting a toy drive on December 13th at the House of Blues from 4 to 8 p.m. At the restaurant and bar. 10% of the proceeds will be donated to um,
You're doing it to the which toy
to
drive?
to to charities. Sorry. Oops. To charities. Please come visit us and bring a toy. Um, Again, that's December 13th from 4 to 8 p.m. Today we're going to talk about the cost of waiting in regards to purchasing a home. You'd be surprised the difference in how much it's going to cost of purchasing a house today versus, purchasing later. A lot of people want to wait till later to purchase a house.
Mhm.
And right now, when we were talking about it, it made me think about when I purchased my house and what, man, just made me feel old. 18 years ago, 18 years ago when I purchased my first home versus, when we purchased our last house 2 years
Mhm.
ago. But if you want to, kick off and give us a little bit and illuminate.
Yeah, so I mean, typically being in the real estate industry, me being a lender and Lizette being um, a real estate agent, we always encourage people to buy now, buy now, buy now, buy quickly. And one of the things that we know is that homes become more expensive over time. If you wait, the more you wait, the more that you'll have to spend for a home eventually. But sometimes people, it's hard to put numbers to that because when we open, or turn on CNN or any of these other or Fox News or whatever, when we see real estate news and economic news, it's typically for the entire country. They may say, "Oh, the entire country doesn't have as much supply," and that's something that recently MSNBC had a story about how the national inventory for homes is dropping. And so does that apply to us? Because we're here in the Houston area, and our economy is different than the national economy. So we always have to look at what it's going to cost us here locally if we wait to buy a home. Now, fortunately, our economy locally is doing really great. Real estate is moving quickly, and we do have more supply than what the national average is. So, one of the things that we wanted to do today was to kind of help people quantify the cost of waiting to buy a home. It's very easy to kick back and say, "Oh, it's a complicated process. I don't want to apply for a loan yet. Let me put it off. Let me wait till after Thanksgiving. Let me wait until after Christmas. Let me wait until the beginning of the year." And all that waiting has a cost associated with it. And what we wanted to share with you guys is more is local costs on the local level versus just what the news is going to report, because the news is never going to report just what Houston has. So one of the things we kind of want you to see is we want to compare, what it's like buying a home today versus buying a home back in 1999. I don't know if anybody can remember what they were doing back then, or if they were 5 years old or 20 years old. I mean, we've got a wide array of range of home buyers. So we wanted to compare the two to kind of give you guys an idea of if someone had bought a home then, what they could be expecting versus somebody who's buying a home now. So back in 1999, the area median income in Houston was 36,000, about $36,000. As compared to today, in 2019, it's $54,000. Now, that is just the area median income, is not the average. But when you look at just that in comparison, that went up by 1.5 times in about 20 years. Okay.
Which is not much at all.
Yeah, it's not. It's everybody's individual income does change if you go to school, if you're anticipating that you're going to be working a different job or you're going to improve your business or whatever. Different people will fall into different ranges, but if you're part of the median crowd, the average Joe, like everybody else, comparatively, this is what you're going to be looking at. Now, when we take a look at the median price of a single family home in Houston, in 1999, it barely broke over 100,000. It was $102,000. Today, the median price for a single family home is 239,900. Now, does that mean there's nothing cheaper? No, there's cheaper homes, but it's not like it used to be. Some of the areas back in 1999, where you had an average house of about 90,000, now they're about 180. So there are areas that have even appreciated higher. This is just the median price.
Mm-hmm.
So, but that has gone up by 2.35 times. So if you compare that to the average median income, the cost of a home is going to outpace the amount of income that most people are going to earn year over year. So what does that mean is once everybody has a budget, right? And you spend so much money on your housing, so much money on your car, so much money on credit cards, food, and everything like that. So as time passes and housing becomes more expensive, more of your budget is going to go towards your home, and then you have to cut it from other things.
Correct.
So if you're cutting it from how much of a car payment you could have, well, guess what? You're not going to drive as nice of a car as you want. Or if you have to cut it from your credit card debt or your spending, you're not going to be able to buy what the stuff that you're used to. And one of the things that could throw a wrench into this is if let's say you're a young couple, and you're planning on either adopting kids or having your own kids, they're going to come. That's going to be something major that's going to hit your budget because kids are expensive, right?
No, never.
Yeah. So these things you have to think about. And one of the things that's an advantage is once you buy a home, and let's say you buy it with a 30-year fixed mortgage, your payment's going to stay the same. It's going to be frozen as of the time that you bought. Now, your taxes and insurance may change year over year, but you have tools to keep that down as much as possible once you're in. You could always shop for your homeowner's insurance year over year, and you could also keep a close eye on the county appraisal district to make sure they don't overvalue your house to keep it as cheap, especially with the homestead rules that we've talked about in previous shows of locking in the value of your home right when you buy it. So that's always a tool that you have. So pretty much you're not going to see, the market can increase, but you being in a home, that your equity is going to increase, and nobody's going to ask you to pay for more money.
Exactly.
So another angle of this too is you take a look at renting a home, how that's changed, and renting a home isn't any cheaper either. So renting homes in Houston actually went up by 2.4% from October of this year as compared to last year, but rentals of townhomes and condos dropped by about 15%. So the average rent for a single family home in the Houston area is $1,795 a month. So when I saw that, I was kind of shocked by it because that's close to what the payment would be on the median home. So whether you rent a property or you own it, you're looking at about the same payment.
Stop scaring people. That's not a payment.
Well, you can,
unless you have a really expensive house, that's not really a payment.
Well, see, that payment will get you up, for something at about $230 plus, depending on where the taxes are. Now,
but most people, regular,
if you buy for less, yeah.
Yeah, most people like to 200,000,
Yeah, and if you
So
find
that keeps them under that. So don't let him scare you, y'all.
Yeah, so and this is what people are paying for rent right now. People in Houston
Pay
that's for single family homes.
Yeah, but but yeah, 1,800, it will get you a really nice house
Oh,
that
yeah.
will yours, and you're not throwing away money because
It's a high number.
if you think about it, we've talked to people that have lived in houses and thrown away. I did the math for a guy, and he had thrown away over $170,000 just living in a place for 5 years. It's
Absolutely.
ridiculous.
And that makes about sense with with the way how being over 100% in 20, so 5 years. I mean,
Even in a townhouse, you can buy a townhouse that costs $100,000 literally.
Mhm.
Your payment in a townhouse that costs $100,000, your payment can be $500-$600. The maintenance is $200. You're paying $700 versus renting that for $1,500, $1,600 a month,
Yeah.
and it's yours.
Yeah, you could always be less. I mean, these are median numbers, and the hard part about it is you can always find something less than median. These are just average middle, and we have people on the higher end of the spectrum that will buy into the $400,000 and $500,000 range. So what it's designed to do is to do apples to apples, because you could be below the median buying something for as low as 140, let's say. But the idea is, how's everything moving together? So that way, because if it's everything's moving together on a median income, but you're buying for less, you're likely to be moving in that same pace. These same statistics should be affecting you whether you're above or below that, but because everything is relative. So that's the idea, is to kind of give people a heads up as to what's going on in the market, and and just as a comparison, in Houston, this year in October, single family homes, there were a little over 8,500 homes that sold, as compared to last year, which was 8,080. So that's up about 6.2%.
But rates are also lower this year
Yeah.
than they were last year.
They're
So
about 1% less.
So this year the rates are lower than they have been in what?
Yeah, so Freddie Mac publishes an average, and last year at the same time they were publishing 4.94, and now they're publishing a 3.78 as an average interest. Now this is an average. Which means there's some above and some below, but relatively it's almost 1% cheaper as far as the rates go. Now this is what the Freddie Mac's posted as a national average. If you're getting a quote from any lender, of course you have to take a look at the APR and the costs associated with that loan. So, when you take a look at this overall, what we want to do is we want to help people, understand, the more you put things off, the more you're going to end up having to buy for more of an expensive, like, let's say, and I've seen people that would rent, and I've seen this on two occasions in my career of 16 years, where somebody rents an apartment for like 30 years, and it's the same apartment home in the same unit, and they just don't go in, and they will rent that thing for 30. Now remember, every time your lease expires in an apartment, they're going to charge you for more money, because remember, the real estate values are going up in Houston for commercial just as it does for residential, so they have to collect more money.
Right now I have a lady that I'm getting in a house, and this poor lady is literally 72 years old, and it's her first home.
Wow.
I mean, she never thought she could get in a house, and she has immaculate credit. She has immaculate credit. She can get 100% financing. I only use two lenders. Everybody knows that. I'm not moonlighting, but but I use two lenders. I use him because he's so great, and then I use Zoe, but because they're the ones that know exactly what they're doing. They know, so I go between the two of them because they know exactly where I need to be, what I'm doing, and what's the you also help me with somebody that's up there, and it's amazing the people that we can get done, and people don't realize that they're throwing their money away.
See, even if you think you have a problem, you're better off starting now to fix whatever that is, or it may not be. See, that's the thing. Sometimes what people think are a problem isn't really a problem, because it's something that's common across the board. So, you always have to get the ball rolling. If you know that you're wanting to buy a house, your family's expanding, you really need to start the process to look at know exactly where you're at, so that way you don't end up paying more for a home 1 or 2 years down the road that you could have had for cheaper today. Because either way, you're spending something on you're either renting or you're living with family or something. You're paying money.
One common problem that I'm coming across a lot is student loans, and that's not really a problem. If you go to them and you go back and go back in good standing, and you make 2 payments and go back to good standing and just come to us, you should be okay. We could get you, as long as you go back and you get back to good standing with them and then get everything else rolling, all he needs is 600 credit score. I mean, if you can get it better, it's better.
No, I've closed loans at 580. So
I know, but it's manual
they're harder.
underwriting. They're harder, but that's why I said 600. But we can do 580. But
yeah, and FHA will accept even down to 560 with 10% down. But one of the things you have to consider is the likelihood that that's going to be the best loan for you. Because I'll give you an example. Let's say someone today has a 590, and they meet everything else. their rate is not going to be as good as someone who has a 700. But then they say, okay, well, let me wait and fix or work on my credit. Well, no, if you can buy now, the cost of ownership in a year could be a lot higher. Your interest rates could be higher. Um, the cost of the house that you want to buy may be higher. And at the end of the day, you'll end up paying the same thing for it when you get to your 700 score that you would, you know, that you would have gotten for when you're at a 590. So you always have to look at that as an expense. A lot of people get spooked today um, by the difficulty or the amount of documents that they're asked for. But you know, if you're working with the right professional, they make things easy for you. You know, they tell you why they need what they need. They help you get whatever documents that you need to get. We all have access to the same government systems and local systems to be able to get anything that you already have. So if you make a moderate effort with us, you know, it shouldn't be stressful. It shouldn't be super hard. And at the end of the day, the main person benefiting is you and your family. You know, they have statistics out about kids doing better in school when they're in a home and they've been in that home for a while, and it's not that they're not moving around. So I mean, all that stuff weighs in, and you have to take a look at it over. It's not just financial.
Another thing, guys, kids that are straight out of college, don't think that you can get into a house just because you didn't have a job for the last 2 years because you were in college. If you give us your letter, that your offer letter from a job, and you prove to us that you were in college, he can get you a pre-approval.
Absolutely.
That's not a problem at all.
We could use your college, you know, the history of you being in school like work history. So it's almost like you were just in a regular job.
All we need is your offer letter, and we have an instant pre-approval. And you need to take advantage of the fact that rates are so low right now because you don't know what's going to happen. Personally, I can tell you, when I saw what we were going over today, I can personally tell you, I knew that that was a fact, but looking at it in black and white, it just kind of, it was a reminder, because I know I bought my house I bought out in Katy, in the 100,000s, and I got a 2,700 square feet house, 4 bedroom, 2 bath, formal living room, formal dining, playroom upstairs, 100,000 back in 2000, and now that same house is 230,000. It's a big difference. You don't realize that until now when you see it in black and white, and it's true. You see
Yeah.
the numbers, and it rings very true. You don't that's why people today, is I always encourage all these, people, is go out and get your house. Don't sit around and wait. You're just throwing money away. Pay yourself for living in your own space instead of throwing
And even
your
if
money.
and even if you think that you may have different goals, let's say in 5 years, if you buy a home and the market starts going up, you start building that equity. And let's say in 5 years you sell your home, you're going to get equity out of that home in 5 years. You could transfer to another property. So it kind of keeps, now the cost of selling a home isn't the same as keeping one, but relatively you should be able to transfer the equity you built into something else. So it's, even if you're not planning on being in a home for 20, 30 years, even if it's, you know, anywhere between 7 and 10, you still have a lot of room to gain when you make that move. And there's a lot of people that and that's where they say there's a lot of wealth that's built in the country over the years and over the generations is, you know, you may have a family, you know, average Joe buys a house, finances it, doesn't do anything else, you know, just works, retires, and that's it. But their home appreciates in value tremendously. So when they pass and they give their kids the home, now the kids have six figures to, you know, open up a business, go to school, do different things, and they get ahead economically. And that's where a lot of people were attributing, you know, early home ownership led to different families in this country becoming more wealthy because they had more options, having more money, and so all that made a difference. So that's something you got to always think about as well, you know, down the road for your kids, that this is a really good benefit. And even if it's not your own kids, if it's other family that's going to inherit property, you know, that's money that they could invest in a range of things.
And with that being said, one of the things you need to keep in mind is, depending on your realtor, you need to keep in mind, and I'm not knocking anybody down, but Ahmed can tell you, I'm very aggressive when it comes to educating my buyers in the process of purchasing a house, because that's really important. There's over 45,000 realtors in the Houston area. And there's part-time realtors and there's realtors that actually know what they're doing. There's really amazing realtors and there's realtors that do this part-time and they're lucky if they get one transaction once in a blue moon. There's realtors that are nurses slash realtors, pharmacists slash realtors, whatever, part-time realtors. They don't know the rules. They don't know the guidelines. They don't know, you know, I educate myself in the lending rules. I educate myself in a lot of things. So when we talk to you guys, we know those things. We educate ourselves in a whole lot of things to benefit you. Those are the kind of realtors you need to seek the advice of, not just realtors that don't know what the heck they're talking about, because you want, like he said, you want something that you can live in 5, 7 years, get the equity out of it, and go into your next house. Pay yourself for living in that space, not throw your money away. Go into your next house, get that money, go into, So when like you said, when you leave your kids, that. But the thing about it is that you can make really wise choices living in the right house.
Yeah.
Making the wise choices, but that's a whole different conversation. Is you just have to make right choices. There is a difference between buying a house and buying a house.
So sometimes people get focused on one thing, and they let it discourage them from taking a look at all the other benefits. If it's something that costs them more today than it would otherwise, and nobody's got a crystal ball. Nobody knows exactly what position your position. You may be in a worse off position in a year or two versus where you're at now. So if you get into the house now, you get that price locked in, the rate locked in, and you're moving forward. Um, maybe you have 1 or 2 bad years, you catch back up, you start doing better, you'll have options. So really, that's the main thing. Just being able to understand the costs of waiting, being able to understand the benefits of moving into a home and actually owning for yourself, regardless of what it is.
And there's so many benefits to home ownership too. You know, Another thing is I had a friend that fell behind on her payments. Life happens, but life happened, and that was just a really bad year. We all have that one year that we all remember, and it's like a snowball. It just got bigger and bigger, worse, worse. To make a long story short, she didn't make her payments for 11 months, and the bank was gonna foreclose, and they told her, if you keep the house nice and clean, we'll give you $5,000 before we foreclose on your house. So she's like, and I said, what are you doing? You've lived in this house forever. So I ran comps. She got $79,000 for living in that house. We sold it right before, and we sold it under value. She got $79,000, and the bank didn't have to do that.
So she actually paid off her loan and pocketed 79,000. Wow.
She was a little upset because she was like, I was like, really, you didn't pay your loan, your stuff for 11 months, but that's still a lot of money. She still had a little bit of money to put away. She still got to pay off some bills and still got to put a little chunk away. But that's what I'm saying. It's really important for you to get a realtor and there's a lot of realtors. Do your homework. There's a lot of realtors that are so smart and and do their due diligence and get informed. So it's really important for you to get a lender
Absolutely.
that's qualified, and there's a lot of lenders. There's some that their hands are tied because of where they work, and there's lenders that can do whatever they want.
We get to write our own rules, right?
No, not so much. But there's different type of lenders, and there's different, like Ahmed, he's a broker. So Ahmed can find a way.
I don't broker out anymore. I used to be a broker for about 8 years, but we're a direct endorsement lender. But what we do is we sell our loans, so we're kind of like brokers.
No, Ahmed's like Trump. He finds the little loop, and he's like, there's a little rule that we can just bend it a little bit, and then find way around it.
So yeah, and that's part of the game. Being on top of everything to help. And even if I don't have the 99% of the time, people that come to me, I have a solution for. But I'm not the kind of person that won't pass you along to someone who can offer you something better if such a thing exists. So if you come to me and somebody else is better suited to taking care of your transaction, I'll recommend you to the best person I know that I can trust and that will do your transaction for you.
There you go. Anyway, well, thank you for joining us today. We hope to see you next Wednesday. Same bat channel, same bat time. Thank you so much. Have a great week, guys.
Hey, thanks.